So the numbers that we had last year at this time were extremely low. So it's grudgingly moving lower, but it will get lower. But every other measurement is much worse now than it was then. The unemployment rate then was 3.8%. Now it's 4.3. It's not so much that it's just 0.5%. It is, on a percentage basis, quite a different change. Some people will say, historically, that's still a low number. It's the change that always is what matters. If it's a high number and it moves up, it's a big change, it creates recession, and vice versa. Now, when we look at some other measurements, like, for example, job openings to those unemployed, well, clearly there's not a lot of matches. We are now at a level worse than where we were in 2019. But here's the other aspect of it, Tim, is that in 2019, as you are very well aware, we did not have work from anywhere being as prominent as it is today. After COVID, work from anywhere. I mean, anybody listening, look at your office. It's half of it's a ghost town, right? So, if you're even working in your office, if you're listening to this, you can relate to that. Why is that important? And nobody really digs deep into this. It's because the job openings, called the JOLTS report, job openings and labor turnover, where we get these metrics. So if you're saying, okay, well, job openings relative to those unemployed, it is now worse than where it was in 2019, but it's so overstated now because of this. The way that the numbers are aggregated is not on a national basis. It's aggregated by each state, and they roll up the numbers to a total number. Well, in 2019, it is possible that you may have posted multiple openings in different states. But today, it's commonplace, because if you're looking for someone who could work from anywhere, I'll post somewhere where employment ranks are either less expensive or more plentiful to fill the position. So I believe that the JOLTS report is perhaps very overstated. So I think that all these metrics are worse. Now, we bring that up as another building block, Tim, because if we know we're in much worse shape than we were back in 2019, then let's take a look at where the Fed funds rate was, 1.75. Today, it's 5.375. Now, by the way, remember we said that that's the most important price in the world. So I'm just going to give you some tough love here. If you didn't know that, then please think twice about your position as being a master of your craft. That's the most important price in the world. You're dealing in an interest rate sensitive environment. It's the building block for all interest rates. You really need to know this stuff. So you need to be on top of your game. I'm giving you tough love here because your competition, those who've survived, your competition's tougher. Business is going to come back in a big way. You want to have the biggest net you can. I want to explain why, Tim, that's so important because, and you know this, Tim, no one's better at being a master scripter than you. In those first 5 minutes or 10 minutes, when you talk to a customer, that's when you win the deal. Yes, rate is part of it. But if you sound like you're sharp as attack and you are on top of your game and you understand this stuff, you have a much greater chance of winning. So it starts there. The easiest way to build your business, the easiest way, is take the leads you have and close more. Increase your conversion ratio, and that's the magic elixir to your bank account growing at a much more rapid pace. Because you don't have to do anything. You just have to be better.